A holiday-shortened week has commenced, but thin underlying liquidity and low seasonal volumes could prompt some sharper than expected reactions. Martin Eichler, are there any potential surprises ahead?
From our point of view, we don't see any surprises ahead at the moment. Particularly the monetary policy decisions in the last weeks were in the range where they were expected, and therefore there is no surprise to be seen at the moment. But of course, the nature of surprises is that they are surprising, so you never know, and the risk of a small volume market is always there.
On the policy front, Turkey is expected to hike its repo rate by 50 basis points and its borrowing rate by 25 basis points. VTB say if they are right on the US dollar, then there may be some relief for EM economies who stand a better chance of escaping recession as 2016 progresses. Do you agree, Martin?
We agree that there are better perspectives for Europe, the EU or the European monetary countries in 2016 than in 2015. Actually, they're not really in recession in 2015, but in a slow growth modus, and that will improve next year, but not by a large margin. The reasons behind that are, among others, to be found in the US, and additional dynamics there of the economy will increase demand. And on the other hand, the appreciating dollar will make it easier for Europe to export.
Oil will continue to garner attention, no doubt, while others say politics will become more of a macro theme in 2016, what with Brexit referendum, Japan upper house elections in July, and of course the US presidency, to name but a few. But now that the Fed have finally moved, what do you think the main focal point will be?
In the first few months of 2016, it will probably be the monetary policy which takes a lot of attention again, because we now saw the change in the US, but at the same time the increasing of the expansive policies in Europe, or the prolonging of these policies. And this new world has to settle into the markets, and it's not sure if that goes without any disturbances. Up to now, it doesn't look like disturbances, but that will keep us busy for the first few months in the next year. Then in the longer run, it's probably all the policy decisions which will keep the agenda busy.
Despite the ultra-easy monetary policy, it has been a flat year in terms of returns in the S&P 500. Is there a chance aggressive dollar bulls will be disappointed moving forward? What is your dollar outlook?
Well, we expect that a lot of the movement of the Fed, as we can see it right now, is already into the prices. Actually, we expect a slightly strengthening of the dollar in 2016. In 2015, we have about $1.11 per euro. In 2016, we expect a ratio on the average about $1.07 per euro. So not a lot of change, a slight strengthening, but not a lot of change.
Another talking point is Abenomics and the Asian currency war. What are your thoughts about this, Martin?
It is an area where it is difficult to see a clear picture yet already. But particularly for Japan, we expect a somewhat improved growth perspective in 2016 and 2017, just above 1 percentage point. It will probably reach. So there is some input from the economics, but it's not really a big push, which was expected. Still below the potential growth in the very long run of that country. For the other Asian countries, for particularly China, we also expect improved position given the uncertainties, but not a lot of additional growth. So the growth rate about 7.5% per year probably will be the growth for China next year.
Martin, great to speak with you. Thank you for your time. Well, the TV team will be covering the events mentioned and more, so please stick with us this festive week. For now, though, it's goodbye.